3,395 banks that are well balanced and in good shape. The banks that should be buying to expand their footprint, I think that those banks, if you can purchase them below or near book value, the serial acquirers are also going to do very well in this consolidation phase that's getting ready to develop. So you can make money two ways: through the bank growing to a premium price to earnings multiple, a price to book value multiple, or of course you can be fortunate enough to own the bank that is sold at a premium to book value that you rather cleverly bought for less than book value. So it's a couple different ways to make money in the M&A trend. This was a really interesting look at it. The report describes the current marketplace as just being fiercely competitive. There's not enough capital to keep the doors open for some of these banks. They're not going to be able to grow, and they just 1,401 of them just simply need to sell the bank and move on. Now, there's another one released by a firm called Austin Associates, and they are a community bank consulting firm out of the beautiful metropolis of Toledo, Ohio, home of the Mud Hens. And they took a look at banks, particularly community banks with assets under $1 billion. And here in the report, they found they've got negative loan growth, negative deposit growth in 2013. Mortgage production revenues are declining because that market's just become incredibly competitive, and the rules and regulations have been tougher. It's harder to find a qualified buyers to make a mortgage loan right now. So they're losing revenue there as well. The stock performance of these smaller banks has lagged larger banks significantly. It's by a factor of about 2 that the larger banks have outperformed the smaller banks. So shareholders are getting a little irritated too. Now, in these smaller banks, this isn't like Citibank, okay? You're probably in the Rotary Club with a good percentage of your shareholder base. So when their stock's not doing well, you're going to hear about it, and you're going to get tired of hearing about it, more importantly. So there's also a huge valuation gap. The larger banks have traded up to a premium to book value. The smaller ones lagging behind, still not trading over tangible book value just yet. So last year, when we looked at this, there was 228 bank deals done, and the average multiple was about 125% of tangible book value. So if you're buying small community banks at 75, 80, 85% of tangible book value, as we've been able to do all year long, you've got a pretty good upside to 125% of tangible book. And you're buying an $8 stock, selling it at 12.5, within a year or two is a pretty good rate of return on your money. So they said that the merger wave is going to thaw in 2014. They note that asset quality has improved quite a bit. Last year, you'd have been buying a bit of a pig and a poke to be picking up one of these little banks let's go back 2 years, let's say, because they had a lot of bad loans on their books. But we're seeing those work through, get better. The non-performing asset ratios at the little banks are getting a lot better. So you're not buying a bad asset anymore when you buy one of these community banks. One of the biggest competitors for M&A activity had been all of the failed bank deals that were being done with assistance from the FDIC, where they were basically guaranteeing a large percentage of that book of bad loans that you were buying along with the failed bank. Those are pretty much done now. I don't think we're going to see too many more of those. So now you actually have to go out and find a bank to buy. The FDIC is not giving away presents the way they were over the past couple of years. The report goes on to note all the same things that we've talked about all year long. Actually since about 2009 now, we've been calling this the trade of the decade and talking about the rising compliance costs, the increased capital requirements, and what the report calls regulatory fatigue. If you've been a banker for the last 5 years, you're just tired of this. There's just constant pressure from the regulators. There's new regulations coming out. It seems like just about every day. They're tired of it. It's starting to make sense to sell the bank and move on with your life. The other reason that for the big thaw is right now, there's absolutely zero organic growth potential in the banking market. Although the number of banks has declined, the number of bank branches has not. And just drive around your own city or town, and you look on just about every street corner, every major intersection in town, it's a good chance there's a bank on every corner. So we have fewer banks. We have more bank branches than ever here in the United States. So you're just not going to grow by throwing up a new branch down the street. The economy is not strong enough to produce the type of jobs growth and loan demand to grow your earnings that way. So we're in a scenario where the only way for the regional banks that really want to grow their earnings and make Wall Street happy and get a higher stock price is going to be to buy smaller competitors. So when you add all of these components up, we should start to see a strong thaw in the number of merger and acquisition deals in the thrifts and in the smaller community banks here in the United States. So with a huge interest in the small bank stock market, I'm excited to hear this. These were fantastic reports. And one thing I noticed in a recap that the Austin Group did of the 228 deals last year, so vast majority of these deals were done in the Midwest. Um, we only saw 8 deals, mergers completed in the Northeast part of the United States and just 20 in the Mid-Atlantic area, in spite of the fact that those markets are heavily overbanked. They need to see merger and acquisition activity. We also only saw 20 deals done in the western part of the country. So most of it was the Midwest, Southeast, and Southwest portion for merger and acquisition activity. Now I think we're going to start to see this work its way up the coast, through the mid-Atlantic regions, up into the New York, Boston, and those major metropolitan areas where consolidation makes sense for an enormous amount of these banks. So, all right, we've got a big week coming up. Got a lot of earnings. Whole Foods will be out, Pepsi, AIG, Cisco, a bunch of other companies. It's going to be a very busy earnings week. And of course, you got Janet Yellen will be testifying for the first time in front of Congress on Tuesday. The Olympics are on. That's going to keep us all pretty busy. Spring training starting. Then we have the U.S.-Russia hockey grudge match next Saturday to look forward to. So it should be a pretty busy and interesting week, and we'll see how it all plays out. Anyway, this is Tim Melvin with the Tim Melvin Deep Value Report with a value look at the world on this rainy Saturday, and we'll talk to you guys next week.